People have always needed a safe place to keep their money. Long ago, people used to store their valuables with goldsmiths. Goldsmiths had very secure vaults to protect their gold. Eventually, goldsmiths started lending out money and charging interest. This was the beginning of banking as we know it. The first official banks were established in Italy in the 14th century. These banks offered loans and accepted deposits. They helped businesses grow and made it easier for people to trade. Over the centuries, banking has become more complex, but the basic idea remains the same. Banks are still in the business of keeping money safe and lending money to individuals and businesses. Today we have online banking, ATMs, and credit cards. Technology has changed how we bank, but the core principles are the same. Banks are essential to our economy. They provide a variety of services that we rely on every day. The most basic service is keeping our money safe. When you deposit money in a bank, it is protected from theft and loss. Banks also make it easy to pay bills and transfer money. You can use checks, debit cards, and online banking to manage your finances. Another vital service is lending money. Banks provide loans to individuals and businesses. This allows people to buy homes, start businesses, and invest in their future. Without banks, our economy would grind to a halt. When you deposit money into a checking or savings account, the bank doesn't just put it in a vault and forget about it. Your money is used to make loans to other customers. This is how banks earn money. Don't worry though. Even though your money is being lent out, you can still access it whenever you need it. That's because banks are required by law to keep a certain percentage of deposits in reserve. This system ensures that banks have enough money on hand to meet the daily demands of their customers. Banks are businesses, and like any business, they need to make money to survive. They do this by charging interest on loans. When a bank makes a loan, it charges the borrower interest. Interest is a fee charged for the use of borrowed money. The interest rate on a loan depends on several factors, including the borrower's credit score, the amount of the loan, and the length of the loan term. The interest earned on loans allows banks to cover their expenses, pay their employees, and earn a profit. Section 5, the importance of interest. So interest plays a crucial role in the world, the driving force behind borrowing and lending. When you deposit money in a savings account, you earn interest. The bank pays you for the privilege of using your money. On the other hand, when you take out a loan, the interest rate reflects the cost of borrowing money. It compensates lenders for the risk they take when lending money. Section 6. Understanding credit scores. Your credit score is a numerical representation of your credit worthiness. It tells lenders how risky it is to lend you money. A high credit score indicates that you have a history of managing credit responsibly. This means you make your payments on time and don't have too much debt. A low credit score, on the other hand, suggests that you may be a higher risk borrower. Your credit score is based on your credit history, which includes your payment history, credit utilization, and the length of your credit history. Section 7, the role of credit in the economy. Credit is the lifeblood of the economy. It allows individuals and businesses to make purchases and investments that they wouldn't be able to afford otherwise. When you use credit responsibly, it can help you achieve your financial goals. For example, a mortgage allows you to buy a home, and a student loan can help you pay for education. However, it's crucial to use credit wisely. High levels of debt can strain your finances and harm the economy. Section 8. The importance of responsible banking. It is essential to be a responsible bank customer. This means managing your money wisely, using credit carefully, and understanding your financial obligations. Here are a few tips for responsible banking. Live below your means. Don't spend more money than you earn. Save regularly. Set aside money each month for emergencies and future goals. Pay your bills on time. This will help you build a good credit history. Borrow responsibly. Only take out loans you can afford to repay. Section 9. Conclusion. Banking in our lives. Banks play a vital role in our lives. They safeguard our money, facilitate transactions, and provide access to credit. Understanding the basics of banking is crucial for managing your finances effectively and making informed financial decisions. Remember, knowledge is power. By learning about banking, you can take control of your money and achieve your financial goals.